than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money.
Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host, Nathan Birch. This is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. And that it is, guys, a big reality. And today, I want to talk about apartments. I want to talk about units. I want to talk about strata properties and the good old adage of houses versus units. So a lot of people come to me and they say, Nathan, you know, I want to buy a house, right? I want to buy the house because the house is better. And I always stop them there, right? I'm like, why is the house better? And they come to me with some stupid reason, like, oh, you know, it's better to have land. The land appreciates and the building depreciates, right? They might come to me and say, oh, you know, it's better. The houses just go up in value, units don't. And there's all these questions about that. And I just put on the silly voice and just, you know, said it because that's the same thing that I was told when I was growing up. And today I've got lots of charts and stats and pictures and videos. So if you're just listening to this on podcast, you may want to come and revert back to the YouTube video, or you could reach out to my team and ask for the slide deck to look at the actual stats. But I'll walk you through them so we can look at some of these because there's lots and lots of info to get through today. So firstly, you've got the houses and the units. I'm just going to go through really quickly benefits and pros and cons. So you've got the houses. With a house, you have to, you know, control the outside of it, right? So if you have a house and the driveway cracks up, you've got to fix the driveway. The gutter falls off, you have to fix that. The bush grows in the backyard, you have to chop the tree down. All these things add extra expenses. When you're buying a house, you have to pay for building insurance. Building insurance costs you money. In strata property, it's covered inside the strata fee. So the strata fee is actually very small in comparison to what it brings out. The other thing to look at with a house, you have to pay a lot more land tax. So the land tax is an added expense once you hit a certain amount of properties that you need to then factor into your equation. Whereas with the unit has a very much smaller, like it's like the land value divided by 50 units or whatever is in the complex. So there is pros and cons to it. I got to a point when I had about 7 houses and I couldn't buy any more houses. And I realized the power of units and I went on to buy maybe 30, 40 units. And then I started building buying more houses. And you know, today my portfolio is very diversified with different types of assets. But apartments and units have a very key role. And a lot of people overlook that and don't see the value and they miss out big time. So if you think about it and go, okay, houses go up, but units don't, does that mean that the units, when they used to be let's say the house is worth 500 grand, the unit's worth 200 grand, does that mean beforehand the unit was still worth 200 grand, your house was worth 100 grand 50 years ago? Does that mean the unit was always worth more? No, right? And that's because they have a place. And most importantly, it comes down to affordability. And that's what I'm going to really get into today and take a deep dive into, because we're now at a point where people can't afford their living expenses, right? People are being forced and pushed. It used to be, imagine going back 100 years ago and you move and you look at someone with an estate, right? Why do they call someone a landlord for? Because they are the lord of the land. They own all the land, right? But nowadays, people don't have the ability to afford all the land. So everyone's stuck in 300 square metre houses, land. You've got people stuck on 500 square metre block of land. You know, I couldn't live like that, right? I've got holiday properties that are on small blocks of land and stuff, but I need to be on acreage. I need to be on farm. I need to be on hundreds of acres, right? That's what's important. So, you know, looking at human history, we're being forced more and more into cities and all our infrastructures in the city, and then the wealthy people have all the farmland and everything outside of that. So looking at it, how much does it cost to buy a house in Sydney? How much does it cost to buy a house in Perth or Melbourne or Brisbane, most importantly, or the Gold Coast? And we look at those areas and we go, okay, it's $1 million in a lot of locations to be able to afford a house, maybe even $1.5 million to be able to afford a house. People can't afford that with their income. So those houses will continue to go up with people with equity that can trade in between houses. But for starting off people and people that are migrating to the country, what is happening to those markets? So looking at it, apartments and units give a very good entry level into the market. So there's a lot of demand there for that. Secondly, the building and construction of these, I'm going to revert to some charts now. I've got a couple of little charts here and we'll put them on the screen. So we can see here some Sydney completions over time. So looking at the Sydney units here, we can see on the chart on the screen, in 2009, we completed 4,500 apartments. In 2010, we completed 4,700 apartments. In 2011, we completed 5,700. 2012, 6,800. 2013, it sort of doubled to 11,500. 2014, got to 15,300. And it kept going up, as we can see on the chart here. We had a peak building boom in 2018 with a construction of 30,900 units being completed. And then in 2019, it started to decline to 25,500. 2020, we ended up with 20,700 being completed. In 2021, 13,400. And 2022, 5,700, we can see here on this chart. So looking at this chart, we can see that there's less and less, and that was pre-2020 with all the things that happened in 2020 that occurred. We have seen a decline on apartments being built. And we go out and have a look out in the market and see what issues are there in the market today. We've got builders dropping like flies, right? We've got builders going broke every week. We've got construction prices rising dramatically. We've got inflation that's hitting everybody. So it's like, if we don't have the ability, if people don't have the ability to go build a house or buy a house, there's going to be less stock entering in the market because we're not filling up for the level of growth that we're having. We've got migrants coming through. We need to have more and more migrants coming through the nation on, as many as we can get so we can increase our taxes. We've got a shortage of almost 400,000 dwellings to be built in the country. There's 400,000 properties, right? And we haven't even turned the taps on yet for massive immigration. If we have that, where will these people live? And how can we build the properties to have them enough dwellings quick enough? So if we look here, we've got a declining level of building that's happening. We've got, for the foreseeable future, less and less construction happening on the horizon because everyone's going broke. Well then, what does that mean for the markets? There's less and less affordable housing. So we look at this next chart here, which is, we've got a few charts here. We've got the first one, which is Sydney, the second one, which is Melbourne. So we started off in 2009 with 4,100, then around 2012, we had 10,000 a year. Then around 2015, we had 14,700. We've got 2016, we got 19,400. It started to decline. In 2020, we had 19,000 being built. So Melbourne's got a lot of dwellings that are being built in apartment space. And when people ask me why I'm not a big fan of Melbourne, apart from the fact that it's more of a communist sort of regime down there, it just has that feeling about it. And I like Melbourne. I like to visit it. There's no problem there. But, you must tell me if you really feel happy with your leader down there, that is a dictatorship. So it's just not a really good feeling that I have. But when you look at the market, you've got more dwellings being built than what you have migration coming into your state. So you've got a supply and demand issue where you've got a lot of product, but not enough people, unlike Sydney. So this is my view on that. But when we look at a place like Brisbane, right, and Brisbane's really interesting one here. We see in Brisbane, the completions in 2009, there were 600 apartments, and in 2010, 1,100, 2011, 2,300. There hasn't been the same level of construction of these apartments. And you look at times like 2016, 2017, there's 11,000, 10,000, and there's declining amounts of units being built. So we've got Gold Coast and Brisbane, we've got a massive shortage of stock out there in the market at the moment, just simply due to the fact that there's not enough dwellings as it is. And if you've got more migration coming through, not enough dwellings. Like I saw an ad I think it was an ad on my Facebook today from the New South Wales government, Service New South Wales, saying something like there was 5 ferries of people coming, and this isn't boat people, by the way, guys. Now there's 5 ferries worth of people coming to Sydney every week to migrate to Sydney. That could be international, that could be national. So if you think about that, over 5 ferries a week, how many people fit on a ferry? I don't know, 100 people. That's 500 people a week, or 600 people. I can't remember if it was 5 or 6. It was up there, but it was single digit still. So let's say 500 people a week in a year. That's 52 weeks. That's tens of thousands of people a year that are coming into Sydney market as well. And what dwellings have we got that we're increasing? We don't have much land. We've got to go up. And if we look at these sort of large building companies, so we've got the companies that are building like Lendlease and Stockland and all those sort of companies that are out there, they have been doing these large greenfield infill sites. So we've got all these subdivisions that have been occurring. And I keep a very close eye on all of these developers, because where they're building, they're actually running out of land. So they have no new land to sell. They have to move out of the city to build, which people aren't there to be able to supply and buy all the properties. Or they need to go and buy older properties and knock them over and building apartment complexes. And I think that that's a way a lot of these large development companies are starting to head, is to go more towards the level of building units and apartments, because that's where their market is at. So just something to keep an eye on over the course of the next few years. But we'll look at this chart here, which is the weekly rents, and it's the national view of the weekly rents. We can just see here pretty much straight away that weekly rents have gone up since 2010 nationally. 3-bedroom house started off about $370 a week here. Now it's up to nearly $500 a week. It's touching on that. We've got the weekly rent for a unit was $300 a week. Now it's touching up close to $400 a week. We've got more and more people being able to afford less, so they need to go to more affordable options, which is pushing more people into this apartment space, which if you can get these things cheap, you could have one house, which could be $1 million and you're getting $500 a week for, or you could have 5 units at 200 grand a piece that are bringing you $300 a week, so you're getting $1,500 a week instead of your $500 a week, and you've got 5 sets of tenants. That if the rent goes up by $50 per week each, that's $250 rent increase, where your house might only go up $50 or $80 or something like that per week as well. So just things to be looking at. That's nationally. But then we look at capital cities across the whole. We can see here the capital cities, the rents on average in 2010 were around $450 a week. And for units in 2010 were around $370, $380 per week. And then they've gone up quite a lot over the years, and then we've seen Corona that hit around 2020. It took a step back, but that trend is starting to pick back up, and that's very, very important, because the rate of growth, we haven't seen it on a chart like this yet, but rent is being inflated away massively. We can look at places like here's Canberra City. You can see it's just increasing through the roof. We've got areas like Sydney here, which these stats, I know I manage lots of properties in Sydney markets. I remember seeing the markets fall around the late 2017, 2018. I actually used to do the open homes for my property management firm to see, because I thought initially my staff are being lazy. I thought my staff are being, they're not doing their job right. So I actually went out and did the open homes myself, and I saw what was happening in the market. So it did step off pre-2020, and it sort of fell off at Corona, but the rents, these charts is not showing the true accurate point at the market at the moment, because rents are going through the roof. So if we look at these charts, they're going to go up to all new highs on these levels. Brisbane is very consistent, but rents are going up dramatically there. So these new charts, they haven't shown all the rental increases we've been doing over the last little while. But as we can flick through the charts, you've got Adelaide there, you've got Hobart there, we've got Melbourne. Melbourne looked like it fell off the edge of a cliff. We've got Perth, which Perth went through a big recession in around 2013. Prices came down dramatically, but that's a market that's been taken off. And we're in the market picking up all the stock when the market was at its bottom. And that's the important part, is buying, the opportunities that are out there in the marketplace. So looking at this chart here, we've got dwelling units commenced and completed number, total sectors, total type of building, 2002 quarter 2 to 2022 quarter 1. So we've got dwelling units commenced, which is the blue one, which as we can see has gone up a lot in the more recent years, and it's just fallen completely off a cliff. So as we're seeing the demand, we've got inflation hitting, we've got migration hitting, we've got certain things that are occurring in the markets. We're not seeing the completion rates because developers aren't in the market to be able to complete. Most importantly, this last chart that I'm sharing with you is the most important part as to why you want to be an investor, a property investor in this time and moving forward over the next couple of decades. Due to the cost of inflation, due to the cost of funding, due to the cost of the spread of lifestyle and everyone getting thinner, you've got people in 2022 that are on lesser incomes than what they were in 1990s, when I say lesser incomes, adjusted for inflation, now you've got, you used to have one person in the household working. Now you've got two people in the household working. Now you've got two people working two jobs in their households to work to pay for the bills. People can't afford to go and buy properties like they used to. So we'll look here at the chart. This is Australia's falling home ownership rate. In 1994, 71.5% of people owned a property. If we look here in 2000, we've got 69% of people owning a property. We look around 2008, 2006, 2008, pre-GFC, it went down to 68.5, and then it's gone down in 2014. So if we look at 2010, 11, 12, market hit its lowest point at 67.5% of people owning a property, with or without a mortgage, that is. And then as we go down to 2017 and 18, we've got even less people. And if we look at 1920, and then if we look at 2021, which I don't have on the chart, it'll just become considerably less. It's not like more people owning properties than renting. More people are renting than they're owning the property. So we're currently at probably 63 or 64% of people in the country own a property, and the rest are renting. I believe that over the course of the next decade or 2 decades, we will see that tide turn, and there'll be more people renting than what there is owning property. So that means a lot for investors. That means a lot for apartment owners. That means that people are being pushed into lower quality, smaller types of properties, right? I'm sure if we went back 60 years ago and everyone goes, oh wow, I wish I could have the Australian dream of a house on 1,012 square block, which is a quarter acre for those guys that don't know the sizing. Everyone goes, I wish I could have the Australian dream. But what about in 1950 when everyone's like, who wants one of these little shitty blocks of land at a quarter acre? I want my 5 acres, 10 acres, 20 acres, right? And that's a change that's occurred over, 50 years, 80 years, 100 years, whatever. We're now entering a phase where people are going to be forced to live in units and apartment complexes and whatnot. And if you can buy the properties lower than what it costs to build a unit would happen to cost around 300 grand for a lower entry level shitbox anywhere around the country, and could go anywhere up to 500-600 grand for an average type of unit, plus the land, plus the build, plus all the inflation of the materials. So you've got that. If you can pick up a unit for 100 grand, 150 grand, 200 grand, 300 grand in a capital city, you are buying it probably as a better type of build than what they're going to build in the future because the materials are better. You're buying it below what it would cost to rebuild. So new stock in the market would have to be at that level and automatically suck up the stock and the value of the stock to be at the greater level. And it goes back to the point where people say you need to have a house because the house only goes up. But the building costs are going up far greater than the land costs, right? So how much does it cost to build a house today? In Sydney, they're building houses for 800 grand and stuff like that, just for an average sort of house. They used to be 300 grand, 400 grand, 200 grand, going back throughout the decades. The cost of building the property has probably gone up further than the cost of the land that it sits on. And I would be happy to challenge anyone on that front. And that's why I like having units, townhouses and villas as a part of my portfolio, because they're easy to manage. There's a big demand for them. They're easily to sell. They're easy to compare to for revaluations. The value keeps increasing due to inflation and the cost of goods. You can't buy the copper pipes to put back in the walls. When people ask me, Nathan, why do you want to buy 100 motels for it? It's like, well, I'm buying 100 motels, but they all might have 50 rooms in it. So that's 5,000 motel rooms that I've got. You can't even lay the copper pipes or build the bathroom or put the bricks up or the roof on for the prices that I'm picking them up for. So I'm wanting to find things of high intrinsic value that are getting dragged through inflation. And that's a very important thing to look at. So, if you need help building a strategy, whether it's getting your first property, whether it's getting your 10th property, whether it's getting over a finance hurdle, a lot of people get stuck when it comes to finance. They can't, overcome that. All these properties have different parts of your journey, right? A house might be good in your portfolio, but a unit might also be good. A block of units might sound great, but then financing that block of units might be a bit harder. Risk about having a block of units versus one unit in a whole block. Most people think, oh, it's less risky to have a whole block of units rather than having one in a block of 100 or a block of 50. Well, it's not, right? Because you have a limited pool of buyers and it's very difficult to get the financing for it. And you need to look at what the banks are financing, because the properties only have the value based on what people have the money for. And if people don't have the money because the bank's not printing the money and giving it to them for singular houses, well, this is the market where people are able to play in. Well, this is a market that's going to take off. So you need to work out your vehicle of choice for the stage of your journey you're on. People that say, I must only have houses, units are stupid. I think that's a stupid strategy. I think that you're leaving a lot of money on the table and you're not understanding how the finance market works. And there's lots of moving parts within it. So if you do need help, reach out to my team, 1300 367 925. Send us an email at admin@binvested.com.au. Make sure you check in on YouTube, on Google Play, Spotify, Apple Play. And if you like these podcasts, make sure you give us a review, you give us a like, you share it with your friends and family, and leave us a review, please. That'd be great. So we'll catch up soon. Have a great week and keep being awesome. Bye for now.
Yeah, like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar about to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all telling lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, here for the taking, my time is never wasted.